Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. I'm wishing you all a smashing Saturday. And if you are new around here and finding yourself on the channel for the first time today, do consider becoming a subscriber because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's a large part of what we do here. And actually, I'm very welcoming of what we looked at in yesterday's video, this period of congestion for Bitcoin after, of course, the 42K target was hit that we had from earlier on this year. You had lots of targets getting hit. You've had lots of resistance come into play on the broader markets. And actually, this pullback, I think, not only is very healthy from a technical point of view, it's very typical once you reach a target that you may have a period of congestion or rest, or perhaps a pullback. You know, this is very common. And actually, I think not only is it helpful from a technical point of view, it's also healthy for you guys from a mental point of view to kind of bring people back down to earth. When we see a lot of the price action that we saw in December, people put their crypto blinkers on and they often forget to look outside of the kind of lane that they're in at the broader macro context. And that's why I think these market updates are so important, because we never take our eyes off the macro context, which is the sea of things that the cryptocurrency market finds itself in. If you look at the kind of food chain of markets, crypto is still right down there at the bottom at, I think, 1.5-4 trillion dollars. It's largely it's a speck within a broader sea of things. You know, it's a drop within the broader ocean. And we need to pay attention to things like that. And that has a lot to do. Not only crypto internally had a lot of technical targets that were met. You know, even if you look at the likes of Coinbase, which we showed yesterday, that technical target that we had from earlier in the year was met. Something like Polkadot, for example, reached its $9 price prediction that we had and was discussing inside the Patreon. You know, lots of things ran into resistance. Lots of altcoins also, or made their targets and are now pulling back. Lots of altcoins also have had that kind of first breakout from the stage one, which is how we identify a basing market. You can learn stage analysis with me if you want to. And it's very common that once you break out, you come back for a retest or you pause for a bit before you see that further continuation. And there's a macro context to all this. You know, if you look at the stock market, it's at resistance. If you look at, we spoke about yesterday pre-non-farm payrolls release, that actually I think the likelihood was that you were going to have an overshoot in non-farm payroll, which of course we had. I think they lowballed it deliberately. This, of course, adversely to crypto, stocks, and of course gold's at resistance. The dollar, the Dixie, more importantly, it found a little bit of support at a very key support level. We don't think this is going to be long-lived, though, so we don't think the pullback for crypto and the congestion is going to be long-lived, and it's going to start a new market, i.e. a bear market from the bull market that we were in, that we think started in 2023, start of 2023, certainly for Bitcoin, and altcoins of course caught up, but generally crypto in start of 2023. You know, this is just a short, it's a period of congestion. You know, it's a rest. And of course, altcoins get thrown around violently as a result of this. But actually, when you look at the broader context of things, it looks great. We used Injective as a kind of blueprint, I guess, for where altcoins are going. And they're following that path brilliantly, despite perhaps what might be a macro narrative. And the news flow, you'll notice today, if you look at your news flows, it's all very negative. You know, AI getting sued or Microsoft getting sued and Apple looking at potentially getting lawsuits. This was all signified actually with resistance before the news even came out, which is why we champion technical analysis. So we're going to be diving into all that in this video, guys. I suppose one important thing for me to say is that this is healthy. This doesn't worry me. Our broader thesis on the markets for this year is still 100% intact. You know, it's always interesting when Capo's trending on Twitter again and the bears come out the woodworks and say, I told you so. When actually, when you look at the charts, you know, different picture being painted. So I suppose, you know, we should probably start by looking at obviously what took place yesterday with non-farm payroll. And you can see the numbers for yesterday were supposed to come out at 168,000. They came out at 216,000. Now, I thought it might come out at maybe 190, 180,000 and be an overshoot. However, it was a massive overshoot. And markets are very rate sensitive, okay? And they're constantly trying to figure out where rates are going. And I think, and I said this going into this year, that one of the biggest challenges that we would have, or the markets would have, is have we got rate cuts or the kind of forecast of rates right? And it was my opinion that I don't think we did. I think the Fed are going to stay at this level for longer than people expect. If we go over to the CME tool, you can actually see that March, there's a higher probability, according to the CME group Fed Watch, that the Fed are going to cut rates then they're going to keep them where they are. I think perhaps this is premature. Okay. Certainly, the Fed are going to want to, if you look at what's a bit of a segue here now, guys, if you look at what's happening with the reserve repo, the Treasury are draining it to basically issue new debt. When they up the debt ceiling, that's when the reserve repo got drained. And there's going to be a lot more debt. That debt's going to be continued to get issued on perhaps an even amplified basis. There's also going to be a rolling over of new debt at a far higher interest rate. So they're going to need to continue to issue debt at a time when nobody wants to buy debt. So they want to make that debt as appealing as possible, which kind of means keeping interest rates higher, if that makes sense. However, to put a capstone and to finish on the reserve repo comment, a lot of people are worried, obviously based on what happened in 2018-19 with the reserve repo getting drained. But actually, you've got to ask yourself the question, okay, when that gets drained, who then steps in and buys all this debt that they're going to issue? Because we're in a proliferation banana republic. It's going to have to be the Fed. And actually, this could be what the reserve repo is important to watch, because it could be what makes them cut and makes QE kind of turn on. It's kind of non-official QE, I guess, what's happening with the reserve repo. So back to what we were talking about before we segued. I see a lot of people asking me questions about that. You know, we do keep an eye on all this stuff. It's part of what we do here, and part of what we try and teach you guys to do, because we think it's important. You want to take a broad view of the markets. That's going to allow you to figure out where your specific market is going. If you have just like the trend is your friend, if you have the trend behind you, if you have the broader macro context behind you, you're going to do well or better than somebody that doesn't quite understand what's going on in the world around them. So I think this is premature. And I think very interesting, the comments that we saw. Swaps price, March rate cuts back to 50-50, odds after jobs report. Yes, this is exactly what we're talking about. You know, you can see the jobs report came out as a significant beat. This is at a time where crypto was already sort of at this period of congestion. You know, there was a bit of a continuation pattern here for Bitcoin. You got a really harsh slam, which of course I think was initially triggered by the Matrix port news, which kind of didn't really turn out to be news. And if you look at what Eric's saying, who's the senior Bloomberg analyst for ETFs, he's kind of saying, this doesn't really add up, to be quite honest. And I think, and I really do want people to subscribe to this channel and to get on board with what we're doing here, because we try and quiet down the news based on technically what's happening with the charts. And when you look at technically what's happening with the charts, things look healthy. You know, we don't try and sell you trading signals. We don't try and sell you all this nonsense. We're just a traditional technical analyzer that looks at the markets from a traditional point of view and tries to work out, you know, where it's going based on the broader macro context. And this is absolutely a bull market. You know, it's very ironic, I think, and interesting and misplaced to see the bears coming back here. You know, Capo was trending on Twitter, had a comment on my YouTube video yesterday saying Capo was right, we're going to 10K. There's nothing to suggest that. This is just a period of congestion. Bitcoin made its target. And I'll show you this. Coinbase also we looked at yesterday. Look at the target that we had from lower down this year and where Coinbase got to and where it pulled back. Maybe I'm just too big-headed, but we don't see other people being this accurate on markets on YouTube. I'm sorry, we don't. If you look at where we ran from, even NASDAQ, our lower down target, hit the target. This is how things goes. But lots of targets made. If you look at the S&P, for example, and its target, you know, it's right at resistance. And there's always going to be a news narrative that supports that. The dollar was interesting yesterday because the dollar had quite an indecisive day despite what should be good news for it. And I think there's a lot more of a grey to this. It's not as black and white as what we've previously seen. For us, the dollar going above 104 is bad. Okay, that kind of breaks what is short-term market structure, and you could potentially be looking at the dollar going higher. Our broader thesis on the dollar is that it's ultimately coming down up until a point where it finds its feet and the dollar milkshake theory takes place. We're looking well advanced at markets, or well into the future with markets, and trying to figure out what crypto is doing as a result of this. You also saw, this is the yield curve, which actually did quite well. Remember, we are consistently watching the yield curve because we don't want to end up in a period here because that's when a crash is likely to occur. Have I got some yields on here? Yes, so this is government bond yields. Remember what we spoke about, and we've done a lot of speaking about. You got the dollar and you got crypto, which are they're adversely correlated. So when the dollar's going up, typically crypto is going down. And when the yields are going up, which are kind of a barometer for the dollar, and the need for it to be strong, the same thing happens. So you're in a period that technically has been signaled that also the backdrop is now supporting, where you're just getting a kind of bit of a macro headwind, basically, for the markets. But they do push through this, in my opinion. And I don't think it's going to be very long before they do that. I actually personally think that's on the turn, if I'm being honest. Raul has, people like that have tried to, even people we've interviewed have tried to be called that the whole debt. They've basically said buy bonds, wear diamonds throughout this entirety. Been totally wrong, as these bigger accounts are consistently. Just my opinion. No hate there. I think that they're great advertisers. I think this is on the turn. I think also the likes of real estate, if we look at some real estate ETFs, is also on the turn. We're bulls, and this is just a period of congestion for us that will ultimately lead to further continuation. And we do have some altcoins that are faring quite well that are in niche categories, but during this period, altcoins do get thrown around very violently. There's no doubt that this is a breakout. Look at the likes of Hedera, Resistance, DOT. Let's get this on log. This was a big target that actually might set up for continuation, providing you don't break this level. There's lots of cryptos that we're looking at that look very good, healthy, and ultimately, I don't want to say it again, are going to set up for continuation. Maybe that should be our slogan, continuation. So that's really what we've got for you in this video, guys. Just a nice update to kind of give you maybe a bit of a 360 technical view on the markets, and just to say, look, everything's fine. This is healthy. Embrace it. You have to understand, again, why I think mentally this is good for everyone is it brings people back down to earth. The blinkers that they have, they go, oh, well, hang on. I thought we were in a bull market, and that's what these blinkers are basically, the road in front of us looks like that. But actually, there's still a lot of things going on outside of us that we need to sort of take the blinkers off and take a look at and observe. Subscribe to the channel because we'll help you do that. On that note, guys, I'm going to love and leave you. I'm wishing you all a smashing Saturday, and I'll see you all this evening and, of course, in tomorrow's daily market update.